morning, good afternoon. My name is Susanne Mariga, and I am the Chief Accountant and Chief Profit Advisor here at Mariga CPA. Welcome back to our Profit First Masterclass. Today's topic is an exciting topic because we're going to talk about the PPP loan and the Paycheck Protection Program, particularly forgiveness surrounding that loan. Like I mentioned the first time, if you have any questions as I go, please go ahead and put those questions in the chat. I will make sure that I will get to as many as possible in the chat, so please feel free to do that. We're going to have a Q&A at the very end. And before I start, there's just some administrative things. If you're watching us on the replay, we don't want you to miss a single thing. Please hit subscribe. If you're watching us on the replay, we want to make sure that you get access to our trainings, to our videos. We try to produce these weekly on our channel as well as Profit First Facebook group. So please go ahead and hit subscribe now. And I want to make sure that you don't miss a beat. And we are hosting a Profit First Masterclass. In this masterclass, we are going to teach the ins and outs of Profit First, the ins and outs. We're going to really work with you to make sure that you have a profitable year, even in the midst of COVID-19. We feel that it can be done. We're seeing our clients do it. They're just shifting, they're just pivoting, and we want to help you do that too. Our masterclass is going to take place the week of July 20th. We will meet for 1 hour each day at noon Eastern Standard Time. So 1 hour each day, the week of June 20th, and we're going to go over a different topic that relates to Profit First. Now, in order to attend this Profit First Masterclass, to learn the ins and outs of Profit First, I'm going to need you to enroll. So Crystal Johnson, she's going to actually place a link for our class in the chat later on today so that you can go ahead and enroll for this class to attend the Profit First Masterclass training. And it's going to be an online training just like we are here today. And you'll be able to ask me questions. You'll be able to learn the ins and outs of Profit First and really be able to implement that in your business. Now, also, please invite your friends. Don't hold back. Invite your friends. We're on a mission. We're eradicating entrepreneur poverty. What that means is that the more entrepreneurs that are in attendance to this masterclass, the better world we are creating, right? The better world we are creating because we are eradicating entrepreneur poverty, and we don't want to miss out on anyone. We want to make sure that everyone has the opportunity to have their best year ever. And today we're going to talk about PPP loans, and not only PPP loans, we're going to talk about the paycheck protection loans. And particularly with the PPP loans, we're going to talk about forgiveness of the PPP loans, right? And we're going to talk about forgiveness because a lot of you guys that have applied for PPP loans at this point, especially if you were approved in the initial tranche that got released, or if you were approved for a loan in the early part of the second release, what you're finding right now is that your cover periods are ending, right? Your cover periods are ending. And if they haven't already ended already. And so the next phase is the PPP loan forgiveness, right? And for those of you guys that applied in the original tranche before June 5th, you actually have the option of having your loan forgiven either within an 8-week period or the 24-week period, right? And obviously, a lot of us want to go for the 24-week period because that means that we have more opportunity to use the funds that are available. But not necessarily that is the best strategy. So today we're going to talk about strategies in terms of when it's best to apply for loan forgiveness within the 24-week period versus the 8-week period. For those of you guys that are joining us first time today, if you're joining us first time today, what I want to do is I am going to show you how to go ahead and apply for the PPP loan. So I'm going to do a brief screen share right here, and you will be able to see my screen. But literally what you're going to do is you're going to go to sba.gov. So you're going to go to sba.gov to apply for the PPP loan. And once you go to sba.gov, you're going to click that nice red button, and you're going to say learn more about the SBA loan options. And you're going to scroll down till you get to this point here, PPP loan. The great thing about the PPP loan is, the PPP loan was set up as an incentive. It was set up as an incentive for small businesses to really be able to keep their workers on payroll throughout this COVID-19 period. It was really set up to be a relief for our states who were afraid of unemployment rates going up, and to help relieve the system, they really wanted to make sure that everyone, if we can get employers to really participate to keep their employees on, we could get America back working, we could really reduce the unemployment rates. And so this PPP loan was set up. And some of the benefits of the PPP loan is it has an unheard of interest rate. There's a 1% interest rate. So it's practically free money, right? It's free money. It's 1% interest rate. And that's unheard of, right, in the business loan industry. And not only that, but if you applied for your loan prior to June 5th, you have a 2-year maturity rate. But if you applied for the loan and you got it after June 5th, you actually have 5 years to repay it for any amounts that you don't use for covered purposes. And we'll go over that in a minute. And the loan payments are actually deferred for up to 6 months after you have completed your covered period. So you have 6 months before your loan repayments actually start to kick back in. And there's no collateral requirement. So there's no collateral requirement, no personal guarantee, and there's no loan origination fees. There's no loan origination fees. And again, it's very unheard of with that. And then the best part, I think, about the PPP loan is the fact that it can be forgiven, right? It can be forgiven if you use it for very specific purposes with that. And one of the things that I do want to show you is with this PPP loan is that in terms of how you can apply for it is you literally, you'll go through your bank for that. So even though it's SBA money, it's not necessarily a loan that you're going to get directly through the SBA. You're actually going to apply through your lender. And your lender can be the bank that you normally bank with. It can be a small community bank. You can literally apply for it with your lender. And there's an area here on this website here where they actually tell you a list of lenders that participate in this program. So let me go ahead and pull that up right now so you guys can see my screen. I'm going to go ahead and download that so you can see that. And so these are the lists of banks that you can actually apply for the PPP loan. And this is by state. Now, I am going to be honest with you, as a CPA firm, we work with hundreds of clients a year. And so we see what works, what doesn't work. I will tell you that the fastest approver of PPP loans that we have seen have been your fintechs. So they have been your online, non-traditional financial institutions. So like your PayPals, your Cabbage loans, we have seen turnarounds as fast as 24 hours and those fintechs. So if you want to have fast turnaround a PPP loan, you definitely want to do that earlier. And it's probably going to be through your fintechs. Now, if you are not comfortable going through one of the fintechs, the next best option that we're seeing from our clients is really the community banks, the small banks, especially if you have a relationship with your banker that you know them on a first-hand basis where you can literally hand them your application and they're going to go ahead and process it immediately. Definitely the community banks, the smaller banks are the best way to go. Now, if you have a large banking relationship, like with your Chase or your Wells Fargo, get in line. We're seeing that it's taking a while. We're seeing very, very slow turnaround. So if you want fast turnaround, consider going through your fintechs and then your community banks if you have a relationship with them. One of the things that I do want to point out is originally the loan was set to, you were not able to use this loan if you applied for it after June 30th, but that just got extended. So I want to go ahead and show this to you on your screen here. But one of the things that we are seeing is that the provisions of the PPP loan is constantly changing. Originally, the deadline was June 30th, and it's been extended to August 8th. So you have up until August 8th to apply for this PPP loan. However, if you want to take full advantage of the 24-week coverage period, you're going to need to apply by July 16th, right? So July 16th, because this is time sensitive. If you want to use the full 24 weeks, you must apply by July 16th, but you do have until August the 8th to apply for the PPP loan. I hope that helps with you guys that have not applied there yet, that you have that available. So let's get back to our strategy meeting here. I will stop sharing my screen for just a moment and let's talk about PPP loan. So with the PPP loan, let's get down to business on this. So you have, if you've applied prior to June 5th, right? If you applied prior to June 5th and you were approved and you actually got funded by June 5th, you have two options. You have the option for the 8-week cover period as well as for the 24-week cover period, right? You know, understand most of us don't want debt hanging over our heads, right? Most of us don't want debt hanging over our heads. We want to get this over with as quick as possible. But technically, the longer you have the 24-week period, the longer you have to use this money, the more opportunities that you have to achieve compliance, right? The more opportunities you have to achieve compliance, and not only the more time do you have to achieve compliance, right? You have more opportunity to use that fund. So that 24-week period can be advantageous. Now, when I talk about compliance means that 60% of the PPP loan proceeds must be used for payroll. So payroll meaning your salaries, your wages, your health benefits, if you provide those, your retirement accounts, 60% of the loan must be used for payroll purposes. Now, 40% of the loan can be used for other approved expenses such as your interest on your mortgages. It can be used for your rent. It can be used for your utilities. And obviously, the longer the period that you have to use this funding, the more time that you have the more likely you're going to exhaust this funding. So a lot of you guys are now thinking, so which is better for me? Is it better for me to get the 24-week forgiveness period or the 8-week forgiveness period? Now, my answer to you when you're weighing your options of 24 weeks versus 8 weeks, my answer to you is going to be my favorite answer in the world. And that is, it really depends. It really depends on which one is going to be the best option for you. And what I mean by that is if you are a single member LLC or a sole proprietor and you had no employees, absolutely no employees as of February 15th, the world is your oyster. The world is your oyster. Go ahead and go for the 24 weeks, especially if you're going to be in business on December 31st, 2020. Go for the 24 weeks. And the reason why is, when you go for the 24 weeks, when you're under the 8-week provision, when you're under the 8-week provision for cover payroll, you're only able to use $15,385 for your own payroll, right? Because it limits you at $100,000. But if you extend your cover period to 24 weeks, if you extend it to 24 weeks, you're now able to use $20,833. So that means you're able to use an additional $5,448 for your own payroll. So you're able to use an additional $5,448 for your own payroll. And who want to do that, right? This is a great opportunity, right? $5,448. That sounds nice, right? Plus you have more time. Once you exceed that limit of $20,833 for your own payroll, you have more time to use the money for allowable costs such as your rent, your utilities. If you actually own your building, you can use it to pay the interest rates on that building. You have more time now to exhaust those funds. And in theory, you can probably use 100% of those funds, right? If you're a single member LLC, if you're a sole proprietorship and you don't have any employees. And so if you had no employees as of February 15th, my recommendation is go for it. If you're going to be in business at December 31st, 2020, you have nothing to lose. Go for it. Go for the 24-week forgiveness period. Let's talk about those of you who are scaling. Those of you who are scaling and who actually have employees. Your strategy is going to be very different than a sole proprietor, right? It's going to be really different. And for you, you're really going to have to look at your situation and really, really look at your situation and predict what things are going to look like for you. For example, if you're in a restaurant business or if you're in a line of business that you are prohibited from operating, right? You are prohibited for operating due to COVID-19. And that could be because of stay-at-home orders. That could be because of social distancing. It could be that people just weren't ordering, or that's not in the type of business that people could actually come and see you, right? If you were at a spa where there was a lot of manual interaction there, your businesses were closed, right? They were closed for operations during this period. Or if you're a restaurant, you may have had less sales, right? Because of COVID-19. So if you were in a line of business where you were prohibited from operating due to COVID-19, or you were in a situation where you just could not bring back your employees, right? And these are the same number of employees that you had as of February 15, 2020, either because sales just didn't justify you having those employees because you just didn't have sales that it made sense to bring everyone back, or you had just physical limitations in your environment. Now, I want you in this case to consider the 24-week forgiveness option. I want you to consider that. And I want you to consider that because of something called the safe harbor provisions. I want you to consider that because of the safe harbor provisions. And I'm going to go ahead and share my screen for just a moment because I want you to actually see what this looks like here on that. So I'm going back to the SBA website that we are looking at, and I'm actually going to click on the application for you here. So this is the forgiveness application that's also on the SBA website. Now your bank is probably going to have a different website or portal for you to actually go in and actually apply for forgiveness. But this is what the SBA has put out as of June 16, 2020. And particularly what I want to point out is the safe harbor rule. And what the safe harbor rule says that if you were unable, right here, if you were unable to operate between February 15, 2020 through the end of your cover period, which if you're 8 weeks, it'll be 8 weeks. If it's for December 31st, that's December 31st. If you were unable to operate, right, because of the Secretary of Health and Human Services says so, or the Director of the Centers for Disease Control, the Occupation Safety and Healthy Administration related to maintenance of standards for sanitation or social distancing or any other worker or customer safety provision related to COVID-19, check here. Check here. So this is important. This is really important because what this provision means is that if you have the safe harbor provision and you are not allowed to operate, you have something called a safe harbor provision. And that means in forgiveness, we have something called a quotient. And a quotient means that it's a percentage. It's a percentage comparison of the number of employees that you had as of February 15, 2020 versus what you have at the end of your cover period. So at December 31st, 2020, if you don't have the same amount of employees that you had in February 15 because you were not able to operate because your state was in crisis or because of social distancing regulations, you were not allowed to operate, you're not going to have the same amount of employees at February 15th. And so you have a safe harbor provision. And what that means is with your safe harbor provision that if you're unable to meet the employee number or full-time equivalent requirement, that will not be held against you. Because for those of you guys who are able to meet it, what that means is that if your quotient goes down or you're not able to replace people just because you just didn't make sense for you to replace them, your forgiveness would be impacted. But if you are just unable to meet those requirements because it's not in your control, right? It's not in your control. It wasn't something that you could control because of you weren't allowed to operate, right? Because of COVID-19, then it will not be used against you, is what that means. So very important that you recognize that if you're in a business like restaurant or you're in a spa situation where you were not able to operate during the entire period of your cover period, there is a safe harbor provision for you that you can take advantage of. So you'll definitely want to make sure you take advantage of one of the safe harbor allowable rules. Now, if you are a business now and you're able to pretty much maintain your operations, right? Let's say you were able to maintain your operations just like it was to February 15, 2020. You're now going to have to decide, does it make sense for me to have an 8-week forgiveness period or a 24-week forgiveness period? And for you, I'm going to say it depends on what you think you're going to look like on December 31st, 2020. It depends on what you think you're going to look like on December 31st, 2020. And what I mean by that is if you've got a seasonal business, right? If you got a seasonal business and you are going to have drastically less headcount as of December 31st than what you had on February 15th or 2020, you're going to have to decide, do I really want to go to the 24-week period? Because the number of employees that I have on my payroll at December 31st, 2020 is what's going to determine my quotient, right? It's going to determine my quotient and how much I'm going to be able to allow myself to have forgiven. For example, if you're in a lawn care business, right? If you're in the lawn care business and it's December 31st, 2020, I'm going to bet in the lawn care business, most likely you've got a seasonal business, right? You've got a seasonal business. And so with it being cold, with grass not growing like it used to be, or maybe the grass is just covered by snow, depending on what part of the country you're in, right? Less lawns are going to need to be mowed, right? Less lawns are going to need to be mowed. And so your revenue is going to be less in fourth quarter 2020, right? Your revenue is going to be less in fourth quarter 2020 just because of the nature of your business. And for you, knowing that your revenue is going to be less, right? Knowing that you're implementing profit first, knowing that you're going to need less heads, right? You don't want to just create jobs to get loan forgiveness because it's not benefiting you at that point, right? It's not going to make sense for you, right? To go for a 24-week period potentially. That is something you're going to want to consider. Now, if you are predicting also a loss in revenue, if you're predicting a loss in revenue due to COVID-19, right? You're foreseeing a drop in your client revenue as of December 31st, 2020. You're not going to need the same amount of people on staff, right? So if you're in an industry that is being affected right now because of COVID-19, your customers are being infected by it, you're predicting a loss of revenue and you're predicting not needing as many heads, but your business is going to continue to operate. The 24-week period may not make sense for you, right? Maybe it makes sense to go ahead and go for the 8-week period where you can quickly get it forgiven, where you're not going to be affected by this quotient so much. I would say the 8-week period makes sense. Is your business cyclical in nature? Is your business cyclical in nature where your sales decrease normally during fourth quarter? Is there going to be an economic impact for you? These are things that you're going to want to consider when you're thinking about 8-week period versus 24-week forgiveness period, cover period for yourself. For example, if you're in retail, if you're in the retail business, right? Let's say clothing line, right? Boutique type of business. And you know that sales are going to pick up for the holidays, right? Because it picks up every December 25th for the holidays, or not December 25th, but the day after Thanksgiving, right? Let's say you know that your sales are going to pick up, right? And so by December 31st, you know it's going to be business as usual, right? It's going to be business as usual. Things are going to be right back to where it was. Sales are going to be great. You're going to get the same head count, or you might even exceed what you had at February 15, 2020. Then the 24-week period definitely seems like it's a better option for you. And by having the 24-week period, what that means is that you're going to be able to use as much money as possible. And so it makes sense to extend that cover period and go ahead and go all the way through December 31st, 2020. And by the way, there are some additional safe harbor provisions that are out there. And I'm going to give you some hints right now, especially for you guys that are knowing that there is going to be impact to your business in terms of sales. This is a big one here. If one of the safe harbor provisions says that if an employee leaves you, let's say they find a better job, they just want to do something different, or they terminate for cause, something that the employee did that's insubordination, something that is not tolerable by your state normally, then this will not impact your quotient. This will not impact your quotient if the employee leaves you or is terminated for just cause. And so my recommendation is, if you know that sales are going to go down and your employees if they're going to leave you anyway, if they've left you, maybe you shouldn't replace them, right? Maybe you should not replace them so that your quotient is not impacted. So these are just some things that I would consider if I'm weighing the option of the 8-week versus 24-week cover period. What is the nature of my business? Is it cyclical in nature, or, especially compared to my cover period and my comparison period, is my business also, what's my prediction for December 31st? What's my prediction of the economy and my business being able to operate at December 31st? So these are just all some things that you want to consider when you're considering the 8-week period versus a 24-week period. Please make sure that you sign up for our Profit First Masterclass. It is going to be held the week of July 20th. Oh, it looks like Guy had a question, is what Crystal is saying. No, Crystal, I can make sure. It says, you use fintechs. Okay, where can you find them? So the fintechs are your alternative financial institutions. So they're like your PayPal, your Cabbage. You can go online and they should have a place that you can go ahead and sign up for those PPP loans on that area. Hopefully, Guy, that answers your questions. Again, we have our Profit First Masterclass that is starting July 20th. If you would like to attend, you must sign up for this. There is a link that Crystal will put in the chat later on today if she has not already done so. We definitely want to see you. If you're watching us on a replay, please hit subscribe. We want to make sure that you don't miss a video, don't miss a moment. Until next time, we will see you next week and over a different topic. It was great to see everyone again.